Good morning, good afternoon, or good evening, depending on your perspective on the world, and welcome back to another analysis video here. This is Brandon Wendell with you, and it happens to be Halloween weekend. We're taking a look starting off here at the daily chart of the ES, and I've been talking about this on my Twitter account for a while, the inverted head and shoulders, which obviously broke to the upside. And you can see that we made the measured move. Now we're kind of moving into no man's land, and the momentum still looks strong. So unfortunately, I don't really have any measured moves at this point because the previous measured move, if I start, well, let's just clean this chart up here. Oops, wrong button. And there we go, delete all that back. And if we take the Fibonacci extensions here on the last impulse up, which was the head to the right shoulder, you can see that we made that measured move right at the 161.8% extension. So if we're moving for another extension higher, the next one would be 261.8, which actually I don't think I have selected here. So let me do that. And give us the next measurement there. There it is. So I guess I can change the color, make a match. Doesn't really matter, but we're looking at about 47.40 for the next overhead possible target for a correction. We could also potentially consider this to be a small correction in the move to the upside, which means I can throw another Fibonacci in there, see if we have some correlation. So we had impulse up, correction down, and it's somewhat in the neighborhood, about 47.12 to 47.40 is what I look for. The only thing that I don't think we're going to go straight up there, by the way, and the reason why is if we go out to the weekly chart now of the ES, what you'll see, again, let me clean the chart up here, is that we're experiencing a little bit of negative divergence, which means there's a lack of momentum carrying us higher. So typically when you see that prices are making new highs, you should be doing it with increased momentum, not decreased momentum as we see here. So that's the suggestion. We should get a pullback. So if we go back to that daily chart, what we can do is apply either Fibonacci retracements or look for some zones. The first zone I see really is not till the right shoulder right there, all the way back down at what we got there, about 43.64.75. Now, I don't think we're going to pull back that far right away. We can go ahead and also put in a Fibonacci retracement and get some possible targets for the move back down. So I need to put the numbers back in, and they're not correct, so I'll make an adjustment on that as well. There we go. We got 78.6 and also 23.6. And if you're not familiar with Fibonacci's, I've talked about those before in some classes I've done online. So anyway, you can see that a 23% retracement takes us back to 43.38 and a quarter, then back to 4,500 for the 38.2% retracement. Actually, whoops, not that. One more thing here, just to get the percentages in there, just so you have the complete picture. That's all. Excuse me, I want to be thorough. So there you go. Now you can see on the left-hand side the percentage retracements and then the numbers that correlate with that. What we can do to see, because this is our trend time frame, we can drop down to a 4-hour chart and see if there happens to be any zones that line up with that. Because often, if there are zones that correlate with a Fibonacci retracement, those are the higher probability targets. And by looking left and down, this doesn't really look like a good zone here. Maybe you've got rally, base, 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 base. You don't have enough follow through yet to call that a zone. So looking a little further down, we can see we got rally base rally here, which does have a Fibonacci level in the middle of it. It's 23.6 retracement. So if we start to get a retracement going on this week, I would expect it to start to bounce in that area, then push up towards new highs. So that's what I'd be looking for so far on the ES. We can drop this down even further. Let's go down to a 60-minute chart. And on the 60, really not seeing much going on here. We still have plenty of momentum. We're making new highs and also higher highs on the RSI for the momentum. So still looking pretty strong. No signs of weakness yet. Our demand zone that was tested back here. Oops, I keep missing my lines by a little bit. All right. You can see we came close to tagging that demand zone, and I think that's enough to actually wipe out the orders that were in that area. I wouldn't expect this area to hold anymore. It might be like a speed bump on the move back down, but ultimately I do see that 45.42 is a really good buying opportunity in these markets. But with a strong bullish trend going down to a 15-minute chart, I think that if we open up on Monday or even Sunday evening, if we do get a little bit of weakness, you can see it right here at the end of the day on Friday. The small candles indicate weakness in price as well. We could get an immediate pullback into, let's see, this is included in the basing, believe it or not. So I don't know if that's going to be a good zone. You had barely any movement out I would think that the initial thrust to the downside would take us down here on the 15-minute time frame. Actually, I'll just delete that one and give you the better area right here for an intraday target, possibly Monday morning. So we may get a little bounce there, then look to see if we have a supply zone that gets formed as we're moving down, a little drop-based drop, or even this rally base. If we get a drop to follow, that would be your first target. Then your second target would be, you would expect it to continue down to that area I was already mentioning around the 45-40 area. So again, I'm going to move this out so I don't even get confused on that because it's not really a zone I'm looking at trading. So there's what we're looking at on the ES. What I can do is now switch over to the Nasdaq and take a look. And we're looking at the December contract on the Nasdaq. Again, I'll start off with the bigger picture. We'll go to weekly first. Same problem. You see that the RSI is lower on this peak than it was on the previous peak. And not to mention, we have a very large candle here after a move up in price that breaks out of a prior high. Those I consider to be novice candles, as people chasing price on the breakout. As a matter of fact, if we were to go ahead and bring in volume here, so what I need to do is bring that up. And by looking at the volume, we're probably going to see a spike in volume. That's kind of a telltale sign. If you get a high spike, oh, we don't. Surprisingly, we just had a little bit of an increase in volume there as we were breaking through. Normally, you'd have a spike in volume. That would really be the novice candle for a much better opportunity. But since that's not present, then I don't think I can trade it that way. Let's take this down to the daily chart. You can see that we took a couple tries at that breakout point and finally made it. But again, the volume just wasn't there, surprisingly enough. So I'm not going to treat it as a novice candle, which normally with a novice candle, you expect a pullback to the open of the candle, which then gives you a buying opportunity. So in this case, I'm just expecting a possible correction. Once again, I believe if we put in the Fibonacci extensions, we've already exceeded the measurements by far, as you can see. So let's see if we put in the 2618, what we get there. And that hasn't quite been achieved yet. That's a 16,244. So ultimately, that's where the target is. But it looks like we should get a little bit of a pullback once again on the daily chart. Of course, the same issue is that we don't really have any clean, or actually, no, we do have a bit of demand. Let's take a look. I was thinking there wasn't any clean demand until the right shoulder again, which is right here. A very similar picture to the ES, as you can see. So we do have this as well. And we have a rally base rally to contend with follow through. So there is demand at 15,411 to 15,273.75. We'll have to see if that ends up holding. And as we go to a smaller time frame, the 240, again, if we start seeing some weakness coming in on Sunday or Monday, I'm not really seeing anything great. It's just the same area as far as the demand goes for target. You can see we've got drop base rally right there at 15,390.75. And we're still seeing lots of momentum, so there could be continuation to the upside, but I'm just a little nervous when I see those large candles after move up. Normally, you at least retrace to the open of those candles before you continue higher. Dropping down to the 60-minute time frame, we have a lot of demand here, as you can see. So once more, it might be a lot of stair steps to the downside if we even move down that far. We're going to get caught, although this hasn't had the follow through yet. We do have a very good demand zone right here. I go wick to wick on the demand zones when I only have one candle for the basing. So as you can see, we got rally, base, rally with follow through to the upside. And as far as another zone, this is not one here. So we would actually drop down to, nope, that doesn't qualify either. It looks like it's taking us down to the 15,390. That's it. So we've got a couple of possibilities. So far, I shouldn't even include this one because it's not technically demand yet. We need one more candle for follow-through for it to qualify. I need the leg out candle plus 2 follow-through candles. You really want to see a big imbalance for good zones. And that just didn't have it yet. So our qualified zones would be the 15,707, 15,667, and then, of course, the 15,390.75 down there. We can take this all the way down to the 15-minute time frame and see what's up. And we do have a little bit of a zone right here as well, just like on the ES. It's almost identical. So if we get a little bit of pullback, expect a bounce there, perhaps on Sunday evening or even Monday morning, and we might trail down to that area. It'll be interesting to see where we end up gapping open after the weekend. That'll really be the telltale signs of what happens. If we gap into that demand, by all means, I'm going to look to go long. You gap into zones, it usually takes off pretty well. So let's take a look now at the Dow. So looking at the Dow, I need to clean up my chart here because I was doing some analysis previously. There we are. And once again, we'll start off big picture, work our way down. You see the same divergence going on where we've got weakness in the momentum, even though we're making new highs, dropping to the daily chart. Same picture, that inverted head and shoulders have followed through already, stumbling a little bit. And of course, we've exceeded the previous Fibonacci retracement, or sorry, extensions. Oh, no, we haven't. This one's a little different. Notice the Dow is much weaker than the other markets. We haven't even reached the 1.272 extension level yet. If we do fall back on the daily chart, we do have a demand zone right here as a rally-based rally at about 35,250 to 39,906. Actually, it's 227 to 906 is the actual zone. You also have one down here on the daily chart, drop, base, rally, which is again one candle. So the Dow is definitely much weaker than the other markets. We're even seeing that as we're coming up and trying to test the previous highs, we are really kind of weak on the momentum here as well. So the Dow may be the better shorting opportunity, not necessarily the long opportunity. Going down to a 60-minute time frame. Oh, I'm sorry, I'm still on the daily. Let's not skip the 4-hour. And I just hit the wrong keystroke there, so let's do it this way. There we are. So on the 4-hour chart, as you can see, we've exceeded one Fibonacci extension. We do have nothing in this area really as far as good demand goes. So I don't like dirty charts. I'm going to clean this up so I'm not overlapping with things here. There we are. And we can even see that if it does continue to move up, well, let's actually, before I jump the gun there, let's go take a look at the previous impulses and measure those out. So you've got impulse up, correction back down, and sure enough, look at that, right at the 61.8 is where we've stalled out, had a small retracement. What this is actually suggesting is a possible movement up to 36,149. So even though overall this has been a weaker index, it's showing signs of strength right now and maybe some life. We couldn't break out of the prior high. That's the only weakness that I'm seeing right here. And I was going to go ahead and take a look at the measurement for this impulse and correction and see if there's any correlation. There certainly is. Look at that. 36,142 lining up right in this 149 area. That's your best bet as far as your next correction point, right around that 36,150 area. So that's what I'm seeing so far on the Dow. And this happens to be on the 4-hour. We can also check some of the trends on the smaller time frames, like the 60-minute and even the 15. Going to the 60-minute time frame, we've had a rally-based rally. Might as well throw it in there too. We got the impulse up, correction down, stalled at the 61.8. Should be making our way up towards the next target. And I'm wondering, actually, if that 261.8 lines up. I'm betting it probably will be pretty close. Oh, sorry, I got to check that first. No, it's not quite, actually. I was a little off. I'm surprised. Anyway, we can see that there's decent momentum here. We did make a higher high both on the indicator and on price. So momentum is still pretty strong on the Dow, believe it or not, even though it couldn't make the new high. Looks like it's trying to build up to possibly do that. So bullish trend going on here. Drop down to the 15-minute chart. If we do get any kind of a pullback, we have a nice demand zone to fall back to. So I'd be looking at this area as a buying opportunity. What happened to that line there? Come on now. There we are. About 35,633, 35,591. If you get a pullback into that area for demand, you could argue that that's a tested level. And you'd be right, honestly, because you had drop base rally right here. So this may not be the origin of a zone. I always want to check out the origin of the move and not the retest. So this was the origin of the zone right here, drop base rally. That's the trade opportunity. So honestly, we would probably go a little deeper in the zone, if not even break the zone and go to the next level. So I'm not going to look for a buy at the 608. If anything, I want a fresh zone, and we've got it back there. So, or do we? Let's see. 1, 2, 3, 4, 5, 6, 7 candles, too much for the basing. Here we have drop, base, and rally. I would actually look at that area. The only problem is we did spend a lot of time in that area prior to the rally, and it's also early in the morning. Not the best of zones, but it could be a speed bump on the way down. I'm not seeing anything here on the Dow that actually screams out good quality demand that could cause a bounce. So be a little cautious, even though it wasn't looking too weak. If we do fall down on the Dow, we could fall down pretty far. Going into the Russell as the final equity index. And once again, we'll start off with a clean chart here because that's best. We don't want to be framing our opinions or our minds by looking at a chart that has drawings all over it. So you can see how bad the Russell has actually been acting. I need to delete that alert. It is just sideways, just completely sideways. Lost a lot of momentum. Didn't participate in a little bit of a high, but not all-time highs like it did in the other markets. So that's actually a little bit of a warning sign for the economy as well. The mid cap or small cap stocks you see in the Russell actually have a little more influence, or not influence, but insight as to what the American economy is doing, because many of the large cap stocks, they're international. They have multinational customers. So they don't really reflect the US economy as well as the Russell does. So that's a little alarming to see it a little bit weak. This is also the first index that usually drops in a crash. So we really want to pay attention to that. So far, I'm not seeing any signs of crashing though. So, don't worry, don't freak out. We actually have higher highs both on price and the indicators. So we want to watch what we're doing now though. You see on this daily chart, we are trying to make a new high, and we're still getting bullish pressure on that last candle from Friday, but we're failing to get above 60. If for whatever reason we end up making lower highs and lower lows without going above 60, that would be very bearish and could cause prices to trip up and drop. There's not a fresh daily demand zone here. We got to go back. Well, actually, before I go back, no, that one's not. So I don't see anything. I'd have to go to a continuous contract and in order to see that. So let's do that real quick. We'll go to RTY, continuous contract with the most liquid. So that way we'll get the historical data here. And again, we just have to go back beyond the current contract. You can see the rollover dates that they're marking there. There's nothing though. Look at that. We could drop all the way down in the 1975 area. That would be very bearish. Pretty good retracement there, as you can see. And it's on the wrong candle. I need to put on this body, right? Come on, do it. Stinker. Doesn't want to do it for me. It's because it's too zoomed out. I just want to get the right levels for you. Do it accurately. There we go. Come on. I just have to redraw it. We'll see. There we go. 1966.3, 1908.9 is actually the daily demand. So there's no real impulses for me to measure for Fibonacci here, unless I go back to the weekly. We go down to the 240. Let's get an idea what's going on there. And as you can see, we had a pretty big dip, and that broke the overall uptrend that we had. If you could draw a trend line out, it snapped, and we went below 40 on the RSI. We're failing to get above 60 on the rallies right now. That's bearish. So while we zoom in, now we're really seeing kind of the chinks in the armor here, where the weakness is in the markets. And as far as a demand zone, we do have demand here. Let me see what the high of this candle is. It is 38.4. The close on this one's 38.9, so that's above. Good. That means that we have rally, base, rally right there, that if we pull back, that's going to be the likely scenario to pull back to that area. We do also have rally, base, and drop with a little retest, which is unusual. So that may not work very well as a good supply zone because you did pierce that area, or at least retested that area after you left the zone. But if there's still a lot of selling pressure, that would be a pretty interesting area to turn around. We honestly, if we're going to go down, we can't get there. What we should do is just drop from where we are now, because that would keep us below 60 and give us a higher probability of dropping down to this level. So keep an eye out for that on Sunday night, Monday morning. We go into a 60-minute time frame to fine-tune this a little more. You can see that we're stumbling a little bit at some of this selling pressure we've already ran into. And this becomes rally, base, drop. That's not really a good zone. Not going to call it. We do have a little bit of 60-minute demand. It looks like drop, base, and rally. The issue with the 60-minute zone is that we did spend a lot of time there before the zone, before we rallied. And you see all the candles previous to that. So I don't know if there's going to be a lot of buying pressure still left in that area. We might be able to drop down below 2,000, like I said, to that daily demand. As far as the trend on the 60-minute chart, to give you a day trade coming up on Sunday and Monday, we see that we did have similar highs, but a lot less momentum. That's bearish. It's plain and simple. It's bearish. So we go down to the 15-minute time frame, and I'm looking for some selling opportunities. Let's see. We really should just drop from where we are. I don't see us being able to go up any higher, and I don't see any areas to enter. So keep in mind that we may end up dropping from this area. Look for some sell opportunities. If we do drop quickly, we'll probably get a retracement back to some sort of a zone intraday, and that'll give you that a shorting opportunity that you need down to those targets that we were just looking at. have any questions, let me know. Until next time, trade safe, trade well, and take care, everyone.